Hi everyone, let's go through my medium time frame, low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the medium time frame bearish scenario where we're looking for an expanding flat in an A, B, C, which is a 3-3-5 wave move. This wave B is then by itself also another expanding flat with over here a 3-3-5 wave move and then an A, B, C, where this wave B retraced to the most common target area of a wave B in an expanding flat, which is between the 1.236 and the 1.38, and as you can see, that has been perfectly respected for then an impulsive move to the upside, because that is what you want to see in a wave C, and then a wave A, wave B, and a wave C is an impulsive structure. We're currently on the low time frame, which I will show you in a second. We're thinking about a 1, 2, 3, 4, and eventually then a wave 5, where the most common target area once again for wave B, but then the purple count is between this 1.236 to the 1.38, pulled from the high over here at 31k to the low of this wave A. And what is interesting is that it has confluence with the 2022 range highs, and if I zoom out, it is this range over here. You can see the two white lines, one high, two high, maybe even the third high, you could argue over there, which is interesting for then potentially a liquidity grab and then a move towards the downside. And a potential trading setup over here is then grabbing the liquidity, closing below, and then eventually moving to the downside, where the closing below is the entry, stop loss above the high, looking for downside. Of course, we have to wait and see how price is going to approach this area, if it is going to move towards the upside, because on the lower time frame, if this is a 5-wave move to the upside, what you want to see is you want to see wave 5 having less volume than wave 3. So if price is going to eventually move towards the upside, you want to see volume ending below the high volume candles in this wave 3. Wave 3 over here is extended, and usually a wave 3 has more volume than any of the other waves, meaning that if price is going to move to the upside, you want to see a lower amount of volume for then potentially the high of B and continuation to the downside in a wave C, where if price is going to move to the downside in a wave C, you want to at least see these lows taken. And then we have, of course, the yellow target box where we still have some more confluences. However, it's going to be very interesting to see wave C maybe going a little bit deeper towards the 21.8k to 22.6k area, where we also have good support. In the bearish, or actually more bullish scenario, we can then also expect maybe another move towards the upside, and that is then the end of a wave 1, followed by a 3-wave correction in a wave 2 for then continuation in a bigger wave 3. And that is what is so important. If price is going to move to that 32k level with those highs, right, the liquidity that might be taken, how price is going to move towards the downside will let us know if we're going to be in a wave 2 or if it is going to be a wave C, because a wave C to the downside is an impulsive structure, a 5-wave move, higher volume, while if it is going to be a 3-wave structure, you expect less volume, and of course a 3-wave, another 5-wave move. So based on how price is going to react at 32k, if it gets there and then moves towards the downside, we can give probabilities to either this bullish scenario or the more bearish scenario. Now, what is important is that price continues to the upside first before moving to the downside to like 27k. If price moves to 27k, then well, we don't expect another wave 5 to the upside, and wave 5 might already be in on the lower time frames, but as you will see, a potential another move to the upside is still on the cards. And if we then go to that lower time frame and we jump to the 2-hour, then over here you can see a potential 5-wave count that we have currently preferred scenario, where we're looking for a 5-wave move to the upside, wave 5 not yet being finished, where the most common target area for wave 5 over here has confluence with, again, the 2022 range high. So that's super interesting with the medium time frame scenarios for then that potential wick, potential trading setup, and move to the downside. And again, I repeat myself, you want to see the volume of this wave 5 being less than the volume that we had in wave 3. That's very important. If volume is going to be increasing towards the upside compared to a wave 3 amount of volume, then of course this is not going to be a trading setup, because that's not what you want to see. But in this scenario, we then expect wave 4 to be in a little bit later, or wave 4 might already be in. We go to the micro in a second, and then eventually you expect continuation to the upside. The maximum target for me at the moment for a wave 4 is if price is going to take the low over here at 29.5k, which is, if I remove the fib time, the low over here. So 29.5k is important, maybe liquidity grab and then a move up, but closing below is at the moment not something I want to see. However, the 0.5 Fibonacci, which is a maximum target for a wave 4, does have confluence with the blue target box over here, support area between 28.8k and 29k. But as you can see, at the moment, price over here already bounced on a support area, which is a very nice support area indeed. We had a weekly naked point of control here. We had a daily level over here. So that's very, very interesting. You can learn about the weekly naked point of control and daily levels in my educational playlist on YouTube if you want to know more about how to find them and also make target boxes. I also have a video about that. But this is very good, right? Nice amount of support. Price moving to the upside. The question is, will it find enough continuation for a wave 5, or is there more potential for it to drop again? Then the next level of support is this low for maybe a wick and then up. But if the low doesn't hold, the next area of support for me is going to be this target box as mentioned. If we look at the other scenario, where in this scenario, wave 1 is already finished. So over here, we are not looking for another wave 5 to the upside, but this is the beginning of a bigger correction. At the moment, this is an alternative, and the main reason this is an alternative is, first of all, this wave 3, where the count, like a nice 5-wave count in a wave 3 is not easy. Like you can have a 1, 2, maybe a 3, 4, 5, but if this is a wave 4, then this wave 2 is longer than wave 4 in time, and this is not really a nice wave 4 inside a wave 3, like a bit of downside before up. So yeah, preferably this is the wave 4 for this wave 2, but hey, you know, in this scenario we need an alternative. At the moment this is an alternative where this is then 3, 4, 5, and this is the beginning of a correction to the downside, where we are then looking for a wave 2 in this scenario, or this is the high then of a wave C, right? And we look for continuation down. But at the moment, I put the wave 2 on the chart, where the most common targets for a wave 2, Fibonacci targets, is between the 0.5 and the 0.786, pulled from the low to the high of 1, which is between 27.9k and 26k. Rare targets, the 382 and the 886, and a very rare target, the 236. But as you can see, price didn't even hit the very rare wave 2 target. So it definitely needs to find more downside before we can think about a potential wave 3 to the upside. If we then look at the more micro scenarios, a 30-minute over here, now, one of the scenarios shared in my previous video, we were looking for a 3-wave structure in a wave W, for then eventually a 3-wave structure in a wave X, right? Price moving towards the upside. That's also what I said that I would prefer for a wave X. I didn't really like wave X over here. I prefer wave X to make a bit of a higher high compared to this one over here or this one, which is what happened. Of course, is this move finished? Yeah, potentially. We are creating maybe a bit of bearish divergences locally, which I show in a second, but then potentially the high of a wave X for then a move to the downside in wave Y. And if I then move the target area of wave Y to the new high that X made, excuse me that I didn't do this before the video, but I just came back from an event of Google about YouTube, which I was invited to, which was amazing, by the way. But then this is the new target area for wave Y. And what's interesting now is that the most common target area of wave Y, which is the 1 to the 1.236, is in confluence with this low at 29.5k. So keep an eye on that level if price is going to move to the downside, right? Very, very, very interesting indeed. In a more bullish scenario, wave Y is already in then a 3-wave structure, WXY. Now it feels a bit as an alternative because if this is the end of then a wave Y over here in a 3-wave corrective structure that would then ends a wave 4, you want to see continuation in a wave 5. Right now we did have the target box over here as great support, price building bullish divergences over here, which is nice as well. That's what you want to see. Maybe this is like a 5-wave structure and we get a 3-wave move, and then I want to see bullish divergences, preferably between this low and the higher low in the making. That would be nice. If we get that, that might give some confidence for continuation to the upside, where you would expect price to take at least this high, right? For then potentially a wave 5. But if price is going to move to the downside more impulsively, doesn't really create any bullish divergences, then, well, it might be more preferable price is going to take or make a new low and potentially go for that 29.5k low. If we then finally look at the CVD divergences, local CVDs always have priority, and I say that because we do have some bullish divergences over here, higher low on price, lower low on the CVD. The target is this high. So that's something to remember with this scenario over here, where potentially the low of Y is in, and then the target, bullish divergences over here between the lows, target is then this high. So that supports potentially the bullish micro scenario we have, but local CVD divergences are priority. And if we take a quick look, first of all, I want to zoom out to show you the bullish divergences we have between the lows I just mentioned. So over here, higher low in price, but on the yellow line, lower low, and also on blue, lower low on the CVD. And then if we zoom in, you can see that after price made this low, higher lows on price, lower low on the CVD, also on blue. So bullish divergences over here, meaning that people were market short in, but it was absorbed, right? If you want to know more about CVD, check the end screen video. And I also have a one-pager in Discord of everything you need to know. But then more locally at the moment, price started to create a little bit of bearish divergences over here. I've updated the silver group today about the divergences as well, the YouTube silver membership. Over here, we had some bearish divergences going on. These already played out for then a continuation to the upside, as we also then had bullish divergences, higher low on price, lower low on the blue and the yellow CVD, but that also played out. And then more locally, once again, lower high on price, higher high on the yellow CVD, played out already. But then once again, at the moment, price comes back towards the upside. Quickly refresh the page here, where now the yellow CVD is, and this is a bug, right? If I refresh it, then again, this candle is flat. If it shoots up or shoots down, I don't know, it's some sort of a bug. I have no idea. But then between these green candles, we are making a lower high at the moment, but look at the yellow CVD and how high it is, right? Might be a bit of a bearish CVD divergence. But if we zoom out, there is... Let's see if there is that bullish. No, that's just missed out. But we have to wait and see if price is gonna make or continue towards the upside, right? So if I zoom out, then again, the bullish CVD divergences over here. Preferably, you like to see bullish CVD divergences with this high. So lower high in price and then a higher high on the CVD, but at the moment we don't have bearish CVD divergences with this high, so potential continuation is of course possible. We will make sure to observe it. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'll see you at the next one. Bye bye.